Hello, good morning. Please, sorry for the delay. So I'm taking you on today's morning market. For those of you that hear me, please send a message to the. Just type a yes. You can hear me clearly. Please, if you can hear me clearly, send a message saying yes. Type a yes. All right, that's good. Thank you very much. All right, so good morning once again. Apologies for starting behind time. My name is Don Ayo. I will be doing the analysis for. And to get started, we'll go to Forest Factory. So I'll be starting off with Forest Factory. Now, while the discussion is going on, if you have any questions along the line, you need to type, just type your question in the chat box. I will be doing the analysis and also checking your questions in the box, the message chat box. So feel free to drop your questions. All right, so let me share my screen so that you can see what I'm looking at. All right, so I want to believe you can see my screen right now. So I'm currently on the Forest Factory, www.forestfactory.com. So we want to look at what we have in store for today. Now, if you scroll down to Thursday, notice we have a lot of red folder news today being Thursday. So give me a few minutes. So let me add this. All right, so today being Thursday, we have a couple of news events. On the euro, we have the manufacturing PMI, and then we have that's by 9, by 8:30, by 9, we have the flash PMI, and then later in the afternoon, we have some news on the Canadian dollar. On the US dollar, we have unemployment claims. These are just the few things we have today. So these events are likely to cause movement in the market. For the past few days, we've not really had any major events. So the market has been volatile because of some fundamentals. So today we have this is the first time in this week that we're having a handful of high impact news to consider. All right. So all right. So the PMIs are very important news because they act as they are more leading in nature. So these PMIs, we expect whatever happens on this PMI, we should expect euro to respond accordingly. Now already it's already been the actual for, the previous for the PMI, which is the German flash manufacturing PMI, is 49.0, and focus is 49.4. So news is expected to be released in a couple of minutes from now. Now, what this simply tells us is that there's there's a high chance of this news to be positive, and if that is the case, then we should expect euro to appreciate in value. Now, for those of us that traded euro USD yesterday, you must have seen the massive movement on the euro USD. I was able to catch some of those moves. So we'll be doing some analysis. The move should continue further if this news today comes out positive, then I would expect that the euro will continue to appreciate against US dollar. That being said, we'll quickly go to the charts, and then we'll do some technical analysis. Then we'll look at what's in play. So the first currency we'll be looking at is Euro USD. So I'll be looking at Euro USD, and then after that, we'll look at some other instruments. Give me a few minutes to share my charts. All right, so I've just shared my screen now. So if you can see my chart, please type chat. Just type chat. You can see my chart. I've shared my screen, but I don't know if you can see it. So if you can see it, just type chat. All right, that's good. Thank you, Williams. Thank you, Chidi. All right, that's good. Okay, so let's start off the analysis by looking at Euro USD. And once we are done with Euro USD, for those of us that would like to look at some other instruments, then I'll give you the opportunity to send me the instruments you would like us to consider. Then we'll do the analysis together. But let me start off with Euro USD. So just like I said earlier, the fundamentals on the euro are looking very, very good. Very, very good. So I'll just do a quick analysis starting from now. If you look at the charts, I'm on M15. You notice that we've been in a very bullish trend. The market has been bullish for quite a while. So just like I was saying, I normally use Fibonacci for my analysis. So what I do is, so for instance, yesterday, this was all I did to catch a very nice move on the Euro USD. I drew my fib from Tuesday's low price. So please look at my cursor. Look at my cursor. So from Tuesday's low price all the way up to Tuesday's high price. So this is what I've just done. So this tool I'm using is called the Fibonacci retracement. I have drawn from Tuesday's low price, this point here, and extended it all the way up to Tuesday's high price. Now, I extended this Fibonacci into Wednesday, and I was waiting for a retracement so that I can buy. Now, the rule for Fibonacci, there are many Fibonacci numbers, but the golden number is your 61.8, which is the level I have just marked here. So this is your 61.8. Your 61.8 is referred to as a natural number. So the rule states that whenever there is an expansion in price, expansion in this case will mean the movement from this low here all the way up to this high, that the market has a tendency to retrace to at most 61.8% of this movement to the upside. So here, 61.8. Once the market retraces to 61.8, you can now take an entry. An entry was taken around somewhere here, buy trade yesterday, and then profit was made all the way up. Now for today on Euro USD, I still expect a continuation of that move. Remember that if we look at the fundamentals, we notice that the PMIs that are coming out, those PMIs are leading indicators that let traders and investors know the state of the manufacturing sector across Europe. So it's a forward-looking indicator. What that means is that whatever number that comes out will help the euro for the next coming week. It's not really, it's something that will affect the euro this week, next week, and maybe the next 2 weeks. So that particular news is very important because it gives investors an overview of how the manufacturing sector is performing. And from the forecast, you can see that analysts are expecting the number to be higher than the previous. The number turns out to be higher than the previous, then we should expect a continuation in this move on Euro USD. So what that means is that we should expect Euro USD to continue to appreciate or move higher. Now, for my entry for today, very simple. I will simply just draw my fib from yesterday's low price and then anchor it to yesterday's high price. And I'll be waiting for a mild retracement to around this region. If I can see the market, if I can see Euro USD retrace all the way down to somewhere here. So just watch the shaded portion on the chart. There's this shaded box on the chart, this region. Yes. But I'm expecting Euro USD to kind of retrace all the way down to this zone. And then from there, I will buy with a continuation higher. So this is how I map out my analysis. For those of you that, okay, some of you may not have known, but the Fibonacci is a very powerful tool if you know how to use it. So I'll be expecting a drop into this area. Now this zone is our 61.8%, and then we expect a continuation higher. Now, how far should we expect this to go? Now, to see how far we should go, I'll be using what is called the Fibonacci extension. Now, this Fibonacci extension tells us the extent to which we should expect an expansion after the market has retraced. So if we record a retracement in the market, after the retracement, how far should we expect the market to expand? So I'll draw my extension tool from the low of yesterday to the high of yesterday and anchor it at 61.8. What that simply means is I will be expecting this move on the euro to go as up as high as this price, which is 1.1800. So you can see 1.1800. That is a Fibonacci extension of 100%. And if it crosses that level, then I will expect to see the market go all the way up to 1.18400. So these are the zones I will be expecting this instrument to get to if this is as anticipated. So all the way up here. So these green zones are areas where I'm expecting Euro USD to get to. That is the news turns out positive, then we should see an expansion all the way up to this particular region. So that is exactly what I'm looking at. So that will require us to have a little patience for an increasement. But there are some of us that might not be in for increasement. I would have preferred to buy down here. But if you don't have that patience to wait that long, which I recommend you try to have, don't have that patience to wait that, then you can look for a mild retracement. Your mild retracement is your Fibonacci gain of 36%. Exactly where we are now. So two options. You can either sell from around this zone. If you look closely on this candle that is forming on our M5, there's a small zone around this area. So you can sell, you can buy from around this zone rather, and then target the take profit above. Or you can wait for the market to retrace, give you a mild retracement from where the market is currently. From where we have the current market price, where I'm expecting the market to get to is about 23 pips. So a movement to the downside of about 23 pips, then you buy from that region. Now, my region is bordering around, so this is the area I'm talking about, this red part. So let me go through the chart. I have, yes, the Fibonacci indicator is on your phone. You can use it on your phone. It's not an indicator, it's a trading tool. It's a tool that you, just like a trend line, you can use it. Now, it's a very important tool. So even if you have your own trading method or your own trading strategy, it's important that you know how to use it. So because it gives you an overview of how far you should expect the market to move. The Fibonacci is mainly used to measure retracement. So whenever there is a massive move in the market, just like you have here, now look at my cursor, look at this movement to the upside. All I need to do is measure with my feet and then catch an entry around this region. Now, my entering around this region is not a coincidence. It's not a coincidence. I have traded this many, many times, countless times to that number. for those of my students that are attending this particular online class, have been attending our physical classes, they can confirm that this is how I have been catching my move. Very simple. Draw your Fibonacci from the previous day's expansion, which is from the low down here all the way to the high. Wait for the market to come down to 61.8. And that's just it. It's as simple as that. So it's not a coincidence that the market actually retraced and then ended exactly at 61.8. It's not a coincidence. This is something that for the past 4 years, I have seen this thing happen over and over again. So you can use it on your phone. As the phone has a Fibonacci, and then you can also use it on the laptop. So on the laptop, it is this symbol. Look at this symbol called Fibonacci retracement. Now, the one I use to get these green levels, that is how far, after a retracement, how far should I expect the market to go? That is used, we use the Fibonacci extension. So once you apply the Fibonacci extension simply tells you after a retracement, how far should you expect the market to go? So for instance, on this move here, if I draw my fib and anchor it at 61.8, you notice that this is expecting, that is from this movement. After this retracement, the extension is saying we should expect the market to go as high as this level here and as high as this level here. So for Euro USD, it's still a bullish trend. So whatever you're doing on Euro USD, just think of buying. And this is my zone. This is where I'll be waiting for the market to come down to before I buy. But for those that may not have the patience to wait all the way down here, you can buy around the current market price. Just wait for a little retracement and then you buy. Can we use this strategy on? Of course, so my guy, you can use this strategy on everything. I use this particular strategy to trade Bitcoin actively. So most of the times I'm trading BTC and it works perfectly well. Very simple. Remember, I think this business of ours, if you go online, if you ask ChatGPT, what type of strategies works best in the market, you will notice something, depending on how well you have used your ChatGPT. Now, ChatGPT will tell you that the simplest method is what works best. So, what generates money in trading doesn't have to be sophisticated, neither does it have to be complex. I have tried several complex and sophisticated trading methods in the past. I've tried a whole lot of them. I've even automated some of my trading processes, complex processes. And at the end of the day, I found out that what works best are just simple things. The most important thing is your psychology, mindset, and your risk management. You need to keep your trading as simple as possible. Whatever strategy you use to trade, keep it as simple as possible. It should be something you can always replicate, something you can always repeat, something if you come online, you don't need to consider. In fact, I always tell my students, reduce the variables as much as possible. Narrow it down to just few things that you are watching. You don't need to watch everything, you don't need to know everything. Just few things are important. Once you know those few things, you are good to go. So use very simple strategies, but strategies that are simple. Don't hop from one strategy to another. Stay on one simple strategy. Over time, you will get mastering over that strategy. You'll be surprised that strategy that is as simple as that. If I show you some of the analysis and trades I take and the kind of analysis I do, very simple, straightforward, you will not even believe it. So at the end of the day, you discover that it's just simple things. You don't need to come with it. All right, so that's for Euro USD. The figures around the retrace, around the worst figure, okay, for retracement, you want to see the market retrace to 61.8%. Very important. 1.8%. At your leisure, go online, Google, just type what is the significance of 61.8%, Fibonacci 61.8%. We find out that Fibonacci 61.8% is a natural number that occurs in nature. It has huge significance. In fact, it is crazy how virtually everything around us is hinged around that number. It's unimaginable. So just go online, go on Google, just type the significance of the 61. Fibonacci 61.8%. It is regarded as a golden ratio or a natural number. Very important. So before, it was not, this whole Fibonacci stuff wasn't applied to the market. It works in medicine, in other aspects of life, but later it was discovered that the same principles can be applied to the market. So we will not have time to go into the details. Your time and do some, let's see for yourself. So you can apply this concept of Fibonacci retracement on any instruments you trade, any assets that you trade. I've used it on currencies extensively. I use it on Bitcoin. I use it on gold. I use it on everything tradable. Used it in the past. Right. So, and the other instrument I would like us to look at is so someone is asking what time frame is more efficient for them. You can use any time frame, sir. For instance, in this analysis I did on Euro USD, remember that I am only picking, let me try to clear this chart. So the time frame doesn't matter. Why? Because I am using daily highs and daily lows. So for instance, if I want to trade on this day, so look at this big green day, this day I've labeled as green, this day. All I need to do is the high price from the previous day, which is this up here, this blue line up here, and the low price from that previous day. So look at what I've just done. High price from this previous day and the low price from that previous day. That's all I need to draw my fee and extend it to the current day and wait for a retracement to that level, which is 61.8. So you will notice that if you're using the high price on the previous day and the low price on the previous day, it doesn't matter which time frame you use. You can use H1, M15, M5, M1. The high of that day remains the high of that day, irrespective of the time frame. If you use D1, D1 will still show you the high of this day and the low of that day. In my use of Fibonacci, I try to limit independence on time, on the time frame, so that irrespective of the time frame, I should get the same result. Use M1, I should get the same result with D1. And if I'm using H1, my result should be the same as M15. And the only way to do that perfectly, the most prominent swing highs and swing lows, and that's your daily highs and your daily lows. Your daily high and your daily low. Draw your fee on your daily high, that is previous day's low and previous day's high, and extend it to the current day, just like we have done today. See what? Let me repeat what I have just done. I drew my fee from the low of yesterday, extend it to the high of yesterday. Now I'm expecting the market to retrace to at most 61.8% of that move, which is around this particular region. Now, because I have picked yesterday's low, yesterday's high, doesn't matter what time frame I use. I switch to M5, my time frame will still remain this low and that high. If I switch to H1, which I have just done now, you will notice that my high, which is up here, and my low down here still remains the same. That's what I'm saying. That is clear. Ask the question. All right. So I hope that is clear. All right, so let's look at another instrument. So another currency pair I would like us to consider is USD. Let's quickly look at USDG. All right, so if you still have any question on the analysis, on the Euro USD analysis, feel free to drop your. All right, good. All right. Dan, nice. It's good to know you understood. All right, so yes, Bini. My people in Bini, yes, you will be seeing me very soon. All right, so let's look at USDJPY. Now, if you look at USDJPY, we've been in a downtrend. So the recent move you can see here is down. But if you look at the overall movements on the higher time frame, you notice we've been trending up, and then at some point we fell into a range. But recent price action is showing us that we're heading to the downside. Now, on USDJPY, I would consider selling. And yeah, there are some reasons. The reasons why we'll be considering selling is because now, if you go to the news calendar, you'll notice that the US and Japan have reached a trade deal. So there's a trade deal between the US and Japan. And if everything moves as anticipated, uh, this should cause the Japanese yen to appreciate, because the tariffs being posed on nations are bound to help the dollar appreciate in value. So we have seen much different behavior in most recent times. But the essence of this tariff is meant to the strength of the dollar. And so since Japan and US have reached a treaty from 2 weeks stop against Japan, so it's most likely the Japanese yen will continue to against the dollar for a lot of time. Now, there was also a news recently that Jerome Powell have tendered his resignation, turned out to be false. So, but there's pressure on the guy to resign. And if he resigns, then we will see the dollar tumble. So the dollar is most likely to fall further if Powell resigns. You know, Trump has been threatening to sack the guy. And if that happens, then we will see dollar continue to. So the letter that was circulating that the guy wrote about his resignation turns out to be false. So with this, there are some other fundamentals also in line that supports the Japanese yen appreciating price. Now, very quickly, if you look at just an example of the use of Fibonacci, if you look at this movement now, look at this particular day. Let me mark this particular day. This day, that's today is Thursday, Wednesday, Tuesday. So if you look at Tuesday, marked with this two red line. Look at Tuesday. But to draw your feet from the high, extending it to the low of that Tuesday, you notice that there's a retracement already, all the way up here. So, but this did not get to our 61.8, but retracement is sufficient. It's enough for you. It's enough for you to head all the way down. So on pound, on euro, on USD JPY, all I need to see is continuation of the move to the downside. So I want to see these instruments give us a mild replacement, which that's done, but I want to see go further way up to around this region. There are two options right now. You can either take a trade from around this region where we are. So let me just mark this side. So look at where we are now. Look at this green line or green box. We change the color to gray box. So look at this gray box. So we can pick a buy, a sell from where we are currently. For those of us that want to quickly jump in, buy trade for, or I prefer to wait until the market hits a much deeper retracement all the way up to around this area. Now, what area is this? This is 61.8 of yesterday's movement. So the movement from yesterday, from the top of yesterday, from the high of yesterday, all the way down to the low of yesterday. Drawing your fee gives you level. So what I'm expecting is a move, continuation up here, and then from there all the way down. What I'm expecting now. How low should we go? I want to see the market go as low as on this thing. All right, so I want to see the market go as low as this level. So that price is around 144.4, 144.969. So somewhere down here. So you can take note of the price region. Around this region, I want to see the market drop all the way to this particular region. Now, this region was calculated from the Fibonacci extension, which shows us how far we should expect the market to go after a retracement in price. So after the market retraces, how low are we expecting the market to fall? And that is exactly what we have down here. So, but for those of us that might want to take the trade from where we are currently, then that means your stop loss will be far above this green level, which is small. So you can allow the market to give you much deeper retracement, take your sell. That's so our Euro USD, our analysis on Euro USD buy, analysis on USD JPY sell. If you have any currencies that you'd like us to look at, please just send it in the chat. So I'm going through the chat right now. So if you have any instruments you would like us to advise, all right. So I'm seeing so someone is asking, so I've answered the question on time frame. So in my opinion, there are no best or effective time frame. You can use any time frame. And then someone is saying, show us how to insert the Fibonacci. Now, if you are using a phone, unfortunately, I cannot display phone. I would have shown you how to use this. Now, how do you extend after drawing the? Now, to extend, use another trading tool called Fibonacci extension. Called Fibonacci expansion. It's called Fibonacci expansion. So, if expansion is going to be from the high to the low of your previous day, and then the third point, the expansion has 3 points: one at the high, one at the low, and then one anchored at your 61 point. All right, so please, I'm just going through. Okay, so someone is saying analysis on FJPY. So CHFJPY. So that should give us a bullish trend. So let's look at CHFJPY. Now, I would have said it's going to be the same with USDJPY, but it's definitely not going to be the same. It's not the same. All right, so on CHFJPY, all right, so let me wait for instruments to load. So I'm seeing gold. I'm seeing pound USD. I knew gold will always pop up. All right, so check FJPY is currently ranging. So if you look at the charts, you can see we're in a strong range on the FJPY. So with that being said, I would most likely not bother trading FJPY. There are some other more important, more trending instrument currently, but you must trade FJPY, be a buy. But as of present, if you look closely, you will notice we're in a very tight range. So when the market is in this state, I prefer to just let it sleep. Just let it sleep. Let it be. So another thing you can do is for a breakout of the range. Your breakout of the range, either to the upside or the downside. Most likely break out of the upside. If you have a breakout, then you can take a buy through. Else, for now, just let this be. All right, so let's look at gold. All right, so gold has started retracing from movements yesterday. So gold has started retracing. All right, so with the level of retracement of gold, all right, please. All right, so back online. Sorry, I was offline. The network got disconnected. Yeah. All right, so if you can hear me now, please just type a yes. Sorry for the breaking transmission. Network is very bad over here. Please, if you can hear me now, just type a yes. Apologies for break. All right, thank you very much. Yeah, Debola, thank you. Moses. All right, thank you very much. Yeah, good. So we can. All right, so let me share my screen so that you can see what I'm looking at on Go. All right, so I believe you can see my screen. So recent move on gold down. So we would expect a continuation to the downside. And how low can we expect this guy to go down? So let me quickly do. So what I will be doing is this. Watch. I'm going to draw my feed from yesterday's high, yesterday's low. See what I've just done from yesterday's high to yesterday's low. Now, my 61.8 is far up here. It is somewhere here. So at the rate gold is moving, I would not be expecting it to come up here for now. So, but what I'm more interested in is how low it can go. And to get how low it's likely to go, I'll be using the extension. Now, the extension will be anchored to the high, extended to 61.8, and then down to the low. So on gold, we're expecting a move down all the way to this point. And if it breaks that level, if it breaks that zone, the next zone will be here. So these zones I have just drawn, these are Fibonacci expansions. These are called Fibonacci expansions. So the expansions are the ones I have labeled or drawn or shown in green. So these green colors are the Fibonacci expansions, which shows you how low we are expecting gold. So if we're expecting gold to go this low and this low, then what we do is we just wait for, it's not good to sell where we are currently. I will not advise to sell from where we are. I would most likely wait for a small pullback. So if we can pull back to somewhere around here. So look at this other level. So I'm drawing this blue level. Let me just make. All right, so if we can pull back a little down here to this place, so if we can pull back up to this level, then we can take a shot from here all the way down to this green level. So for now, it's a sell on gold. So with the move we are currently seeing, short-term sell, remember that gold is generally in an uptrend. So whatever selling you are seeing will not last too long. You will not even expect it to stay too long. Now, I have just drawn a Fibonacci from what day is this? This is Monday. So from Monday's low to Monday's high, and this is an extension of that level. So we are on point. So I'm expecting it to drop all the way down to this level. But before we drop, you can wait for a slight pullback, very small pullback. Except you have deep pockets, then you can sell from where we are. But I would not recommend you sell from where we are currently. I would suggest you wait for a pullback, just like you are seeing on my screen. Pullback up to somewhere here. And then from there you sell and expect to take profit from down here. That's what's doing. All right, so if you have any question on this particular analysis? Now someone is asking the percentage on the expansion. Now the expansion on the MT5 has just two levels. It has the 100 level and 161%. So there's a 100% level. There's a, look at this, there's a 61.8% expansion. There's a 100% expansion. There's a 161.8% expansion. It's default. By default, those are the levels. If you click on the expansion and go down to levels, you have those levels by default. The 61.8, 100%, and the 161. Those are the major levels of expansion, and they work very, very well. I've been using this expansion and retracement for a long time, and they work very, very well. Very, very well. The levels they give, you don't need to stress